If you're trying to buy a home in Vancouver, you know the whole financing game can feel, well, just about impossible. But what if there was another way in? A powerful, alternative path to finally getting the keys to your own place. Today, that's exactly what we're explaining, the strategic world of private mortgages. So, does this sound familiar? You've done everything right. You know you can handle the payments, you've saved up, but the bank still gives you a hard no. It's so frustrating, and it's a super common experience for thousands of would-be homebuyers in British Columbia. You are definitely not alone in this. And this number right here? This is a huge reason why. With the average home price in Vancouver hitting over $1.1 million, the stakes have never been higher. Getting that financing approved is the single biggest hurdle. So, why is it so difficult? Okay, let's break down the biggest roadblock, because it's not just about the high prices. There's a systemic reason why so many really qualified people hit a wall with the traditional banks. And here's the really frustrating part. It's not always about your personal finances. The big banks are bound by these super strict federal regulations and a one-size-fits-all stress test. This test forces you to qualify at a much higher interest rate than you'll actually pay, and that just slams the door shut on so many people who could otherwise easily afford their home. So what if there was a way to cross that gap? This is where a strategic solution comes into play. You need to think of a private mortgage not as your final destination, but as a sturdy bridge to get you from where you are now to where you want to be, which is in a traditional mortgage and, of course, in your new home. So what are we actually talking about here? Well, a private mortgage is simply a loan that comes from a source other than a major bank or a credit union. The money actually comes from private companies, investment groups, or even just individuals who have a lot more flexibility in how they lend. This really gets to the fundamental difference in thinking. The banks, they're kind of obsessed with your past, your credit score, and your provable income on paper. Private lenders, on the other hand, they focus on the asset itself. They care way more about the value of the property and your equity in it. It's a complete shift in perspective. And make no mistake, this isn't some tiny niche market. We're talking about a significant force in Canadian real estate. Non-bank lenders originate close to $100 billion in mortgages every single year. This is a mainstream, essential part of the housing landscape. Okay, so who is this bridge actually for? Let's break down the most common scenarios where a private mortgage isn't just an option, it's the perfect solution. Let's start with a huge and growing group, the self-employed. About 15% of the entire Canadian workforce are entrepreneurs, freelancers, and gig workers. If that's you, you absolutely know the struggle of trying to prove your income to a bank. Here's how private lending solves this exact problem. As a business owner, you're taught to strategically minimize your taxable income, right? The banks often punish you for this, but private lenders, they get it. They can use stated income programs that look at your actual business revenue and cash flow, not just your tax return. And what if your credit has taken a bit of a hit? I mean, life happens. Banks often have this hard line at a 620 credit score, no exceptions. But because private lenders focus on equity, they can often work with scores below 600, which gives you the chance to buy a home and rebuild your credit at the same time. And the use cases just don't stop there. This is such a vital tool for newcomers who don't have a Canadian credit history yet, for people buying unique properties that banks won't even touch, and for those in a hot market who need to close a deal in days, not weeks. Private lending offers a speed and flexibility that traditional banks just can't match. Of course, all that flexibility does come at a price. So it's absolutely crucial that you understand the true cost before you move forward. Let's be totally transparent about the costs. Yes, the interest rates are higher than bank rates. A first mortgage might range from 7.5 to 9.5%. And second mortgages, which are loans taken out against a property that already has a mortgage, they're even higher. Now, this reflects the added risk for the lender, since they're often working with borrowers the banks have already said no to. The key factor is your equity. The more you put down, which means a lower loan-to-value or LTV, the better your rate will be. Beyond just the interest rate, you also need to budget for some setup costs. These typically include a lender fee of about 1 to 3% of the loan amount, plus fees for the broker, lawyers, and the property appraisal. Factoring all these in gives you the true cost of getting the financing. And here's another key detail. Most private mortgages are structured as interest only. This lowers your monthly payment because you're not paying down the loan principal. Now, while that keeps things more manageable month to month, it reinforces the most important idea of all. This is not a forever loan. And that brings us to the single most important part of using a private mortgage successfully. You must have a plan to get off the bridge. I really can't stress this enough. This is a temporary tool, a strategic stepping stone. The whole goal is to use it for a short term, typically 1 to 3 years, to get you into the property while you fix whatever issue was blocking you from that traditional bank mortgage. So you have to ask yourself this question before you even think about signing the papers. What is my specific, concrete plan to transition to a conventional lender with a lower rate?
A strong plan has 3 parts. First, the specific steps you'll take to improve your financial profile, like rebuilding your credit or establishing 2 years of steady income. Second, a realistic timeline that you set with your mortgage broker. And third, knowing your options just in case you need to renew. A good plan covers all the bases.
So ultimately, it comes down to this. For many people in Vancouver, the self-employed, those with bruised credit or newcomers, a private mortgage isn't just an option, it's a powerful and strategic tool. When it's used correctly, with a clear exit plan, it can be the bridge that makes homeownership a reality. The question is it the right bridge for you?